All right, welcome everybody. We're going to get started in about 4 minutes, so just hang tight. All right, well, welcome everybody to the pre-holiday Stocks Analysis Friday. Before we get started, I just want to wish everybody a Merry Christmas, Happy Hanukkah, whatever you celebrate, have a great holiday and a safe one as well. All right, a couple of quick announcements to make before we get going. First thing I just want to tell you, if you're watching the recording, remember to go down into the description area and click more down there, and you'll see a whole timeline of all the stocks we look at today. So I try to do that so you can just click on the stock you're interested in and it will take you right there. But it's very easy to miss. So you got to go to the description area and click more and find it kind of under there. You know, they don't list the whole thing for you to see up front. All right, well, let me go through my administrational items here. Just so you know, the markets are closed on Monday. The holiday Christmas is actually on Sunday, so the markets will be closed on Monday. All right, quick risk disclaimer here. We want you to realize that there are risks in trading the financial markets. Like I always say, without that risk, there is no opportunity. So the two really go hand in hand, and you need to be aware of those. It is possible to lose some or all your money, okay, trading the markets or even investing in the markets. So that's why you need to always use risk capital. Always run any of the ideas that you think sound good past your financial advisor or money manager. And that includes any of the stock opportunities we suggest today, because we don't know your personal situation and they do. So they'll be able to tell you if that's something you should be in or not. And then finally, know how to do risk control. You know, you need to calculate your trade size. You need to know the amount of risk you should be taking. And we can help you with this because we got a bunch of great books on risk control. My newest one is called Money Management for Traders, second to the right. And again, when you watch the recording, I'll put a link to these books down below in the description area as well. But that's a great book for you to get up and running on money management. If you want a really deeper dive into all the risk to ruin tables and stuff like that, the book on the far left called A Trader's Money Management System is for you then. And that's something that's more comprehensive. All right. Also, too, The Art of Trading is coming out, second edition next year. We're putting the final touches on that. It's going to be a great addition to the first Art of Trading, which actually came out in 2008. So we're kind of due. Our publisher contacted us and say, hey, we need another book. So we said, sure. Okay. So it's on its way. It's going to include all the latest software and trading technologies. Then, of course, you know, I've developed a suite of software tools to trade and invest in the financial markets. And they're being currently used in over, I think, like 83 countries worldwide now. We have hedge funds using these. We have individual private investors using these, and active traders and day traders using these. So it doesn't matter what market you trade. It uses technical analysis, price patterns to give you entries and exits. And you'll see me using this on some of the charts in just a moment. And the idea behind that is you can use that on whether you're trading futures, stocks, ETFs, Forex, bonds. Basically, if you can get data into one of our compatible charting platforms, you're good to go. And then we have scanners and risk control software. So it's a whole suite. If you want to learn more about it, go to our website or contact us here at traderscoach.com. We do a lot of webinars on our software, so check it out. All right, finally, like, subscribe, and share. Definitely get as many people here as we can. We had a great turnout last week. Pre-holiday today. All right, people are traveling today, so we may not have quite as many today. But it's great to have everybody that's here and can make it. And if you can't, don't forget the recording. But give us a like, because apparently that helps the video get out to more people. And finally, thank you for attending. Okay, great to have you here. All right, let me come out of here and quickly go over my layout. I'm using NinjaTrader now, but you know, a lot of people use TradeStation with our software. MT4, which is MultiTrader 4 or 5. MultiCharts, for example, is another one. eSignal is another one. So we're pretty compatible on many of the major platforms out there. But this is NinjaTrader, and basically what I do is use multiple time frame analysis when I take a look at a market. So that means 3 charts of the same symbol. So if you look on the chart on the far left, you'll see that that's a 60-minute chart. And that's giving us an intraday aspect of the symbol we're looking at. So we call that kind of the short term, all right? Then we have the daily in the middle. Now, the daily chart is kind of what you're used to. Whenever you open up a newspaper, chances are you're going to be looking at a chart that represents daily price bars, and that's called a daily chart. So that is in the middle. We use that as a primary chart, and we basically base a lot of our risk control and things like that off this chart. And so this we call the intermediate chart. And then we have a chart where each price bar represents a full week in duration. That's a long-term chart. And so therefore, again, of the same symbol, this gives us an overall aspect, kind of a roadmap of where we think markets are going that we're looking at over the next year or so. All right, so that's kind of how we divide it up. Up here is all our scanners at the top here, the rainbow colored scanners running. And I'm not going to be using those today because we're going to be just looking up symbols. But believe me, whenever we create a watch list, we use those scanners to create it. Yeah, that basically looks at all the things I like to look at and tells me which ones are possible good candidates. So that's how we separate a lot of the mediocre trades from the good ones. All right, so I want to take a look at gold here right off the bat. And also, too, don't forget, obviously you're here because you want to see some good stock opportunities, or maybe you want a second opinion on the stocks that you're thinking about. So type those in the comments area in capitals for me, okay? And you can do that now, and then I'll get to them right after I finish a couple here I want to show you. All right, so here's gold, all right? And again, gold, we've talked about a long position in this now for several weeks. Still looking good, all right? So if we kind of, let's kind of open up this daily chart just a teeny bit here. Now, hopefully you can see this at home, but there's a yellow pyramid forming here. Our pyramids are basically the art trading software that we have, and they look at price patterns in the market. Some people call these fractals, of course, and they also look at the momentum that goes into creating that particular pyramid trading point. But in any case, when prices get above the points of these pyramids, they confirm the trade. And so this is confirmed a long trade. It's kind of gone a little sideways recently. So it's still a buy. It hasn't gotten too close to the target zone, which is up here on the far right here. So if we do Elliott wave, now Elliott wave is a form of technical analysis. Some people like it, some don't. I particularly like it. And basically it assigns wave numbers to the different patterns in the market that represent fear and greed. So, you get a market that pulls up a lot. That's usually a major impulsive wave, usually a wave 3. And then you have profit taking. That's wave 4. That's the pullback. And then you have one more final shift to the upside for the end of the trend. So we're looking at gold as putting in the wave 3 and around this area here in wave 5. So we got 4, 5. So we think basically we're going up to a final point at some point here over the next year between 201 and 233 in gold. So I don't think it's too late to get in. I do think you have to be careful where you put your stop. And I think you also, too, have to realize that we have a little bit of a pullback here on the 60-minute. So you kind of want to wait for that to be green over here on the owl. But again, you may get a pullback to here, which will be an ideal entry. So you may want to hold back just a little bit. But overall, this is a bullish trade. Now, I want to take a look at USO, which represents the oil market. Oil prices have pulled back quite a bit. And if we look at this weekly chart over here, I'm going to open this one up here a little bit. And then we'll take a look here at current prices. So as you can see, it's come down a lot. Okay, look at this, all the way from 2009, all the way to where we are at a bottom here. And now we're coming off this bottom that we started coming off back in 2000. And we've pulled back to a fib retracement area, which is these two blue lines. And so now we're kind of due for one more spring to the upside. So I think oil's going up over the next year. That would be my estimate on that. So a long position looks pretty good on this. I would just wait again for this to turn green on the owl. You got the pyramid. This looks good. This looks good. So a little bit of green on that, I think will do good. And then put your stop at whatever the recent bottom is. So I'm kind of liking that. Cryptos, let's take a quick look at the crypto market really quick. I know cryptos, I want to take a look at blockchain first. I know cryptos are down in the dumps here, but also too, so were the dot-coms back in the year 2000 before some of them like Amazon and things of that, Google, for example, Yahoo, all of those rose from the ashes. And I think you're going to have a couple of cryptos do the same thing. It's not going to happen right away, but I do think when this thing bottoms, there may be some opportunities. You know, they had some corruption in the exchanges. Obviously, everybody knows that by now. So that's got to work its way out, and it will. But I do think, you know, at $8, okay, we're probably getting pretty low. It's not quite a buy yet, but we're going to watch it. I wouldn't write it off yet. I wouldn't jump into it yet. Just keep that in mind, okay? I think that's something you got to think about. Now, let me just go through and take a look here. Give me 1 second. And all right, so Pete's with us. Pete, how you doing? UVIX. He wants me to take a look at this. I don't know if you're long or short on this one, but whatever you are, we'll kind of give you an idea. All right, UVIX, I'm not getting here, okay? I don't see that coming up. So check that symbol for me, okay? All right, let's take a look at another one. How about, give me 1 second. Silver. Okay, silver. Let's take a look at silver and see how that one looks. All right, so on silver here, again, starting to climb out. I know people get excited about silver and gold, but silver is a little bit different than gold at this point. It has come off a bottom, but one of the indicators that we kind of rely on is this one right here. And it's still indicating that this low here has a 75% probability of being taken out again. So I'm a little concerned about taking a long position with that, going against those odds. So I'm going to wait for either that indicator to give me a bullish go, or let's see what happens on the next pullback and see if this bottom holds. But for right now, I'm holding back on that somewhat for sure, okay? And I think probably if you're long on that, just kind of be careful because you will get a pullback on this. So you got to decide a good place to put your stop. Our system, if you had gone long, would have your stop here, okay, and your first entry here at that point on that leg up. So that's kind of where we're at with that. All right, let's see what else we got cooking here. All right, let me go over too quickly. I just want to take a look at the intraday time frames on the micro E-mini. All right, because it was kind of messy this morning, and you can certainly see, you know, we've been the market's up 23 points now, but it was down. So here's kind of this is the 5-minute time frame. So these are all intraday time frames we use for day trading. This is the 1 minute, and this is the 15-second. So yeah, a little bit of on the messy side here. All right, I think probably we'll get some more bullishness coming in because this looks like it's retraced on the 1 minute here. So I would say over the next, 20 minutes or so, we're going to get more highs on that. So I'm kind of liking that a lot. All right, let's go back and take a look at our longer term position type of trades. Let's take a look at the SQQQ. Now, this is one that's very popular with a lot of people that have taken positions betting on the market overall, especially the Nasdaq, of course. This is an inverse ETF on the Nasdaq. So when the Nasdaq goes down, this will go up. And it's been messy because we've had a lot of volatility in the market right now. You know, we consider the overall markets, both the Dow and the Nasdaq, to be in a bearish market long term. So we expect many, many more lows. We think 2003 to 2023, I should say, to 2024 are going to be horrible years in the market. We think basically we're probably looking at lows pretty low around 18,000, possibly to 15,000 on the Dow, and the Nasdaq will follow. So based on that forecast, this should go up, okay? But it's very messy. So my recommendation is if you're going to do these, check with your financial advisor, of course, but take long-term positions in these. Now, normally the inverse or the ETFs are not recommended to hold them for that long because there's fees and things involved. But if the market goes to where we think it's going to go down there, these are going to be really superstars. Okay, you're going to do really well on these, and any fees are going to be negligible compared to what you're going to get on this. But we also recommend taking these as a long-term stance. So in other words, you don't try to play these volatile swings in here. Okay, instead you just buy the inverse, put your stop at the high. You know, in other words, if the Dow or the Nasdaq make new highs, you get out of it. And don't bet the farm on it, and bet an allotment of money you can afford to risk on something like that. But it could be a great hedge against your current portfolio if the market goes down. So bear markets are very tough to trade short term because of the volatility. All right, that's why they're people usually wait on the sidelines until certain levels are hit and then go in. But on this case here, if you wanted to buy this and forget it for a year, not a bad idea. Just have a stop in place, and then when you get to those lower levels, you can cover it. So the SQQ, at this particular time, I probably a little bit hesitant on jumping in with a red PTF on the 60-minute. So I'd give this another week or two. Let's take a look at it next time we get together. I mean, this is a 60-minute chart on the far left, so this red could be gone in a week easily. All right, but I wouldn't jump onto it right yet. Let's wait, and I'd also like it for it to break out of this area here, okay? That would be a nice area for it to break. So that's kind of where we're at now. SP for Frank, how are you doing? SPXS, let's take a look at this one. Very similar, of course. And inverse on the S&P. And look at the volatility as well, okay? Now, the other one was the inverse on the Nasdaq. This is the inverse on the S&P. And you can see both markets, a lot of volatility. And again, the S&P and the Dow, we feel, are in an overall bear market. And actually, what's interesting is all the major markets, including the Russell and things like that do the smaller caps, they're all been in a bear market. And this should continue in a big way, as we think we're still probably in the infancy of a significant sell-off next year into 2024. So again, on this here, you've got to make this a long-term play. Now, if you wanted to go in now, you certainly could. The lower time frames are okay. But again, stop loss placement is very, very important. Not a bad place here because it's pulled back almost to the bottom. All right, but probably a good idea to put it down in here. So I'm kind of liking that. Okay, SPX, certainly not a bad trade. And I guess, why don't we recommend that, but with a caveat. Let's recommend that in terms of one I like, but it needs to be not a short-term trade, but a long-term hedge almost, okay? So I'm kind of liking that, all right? And of course, as Frank noticed, we have a green PTF, so we expect this to do really well, which would make sense because it's an inverse if the markets sell off, okay? So looking pretty good. All right, let's see. No, futures, we're not looking at futures today, okay? Sorry. Let's see what else we got here. ETFs or stocks, okay? And let's see what else we got here. All right, Pete says that is an ETF, but it didn't come up. I'll put it in again, UVIX. So explain that. Why didn't that come up before? We'll try it again. Oh, it came up this time. Good. All right, maybe it was just a data thing. All right, so let's take a look at UVX. And what is UVX? This is the VIX futures, of course. Okay. All right. So Larry McMillan's big on the VIX, and so he is also looking at a bear market as well. And we of course agree with that. So on the VIX here, getting close to a little bullish divergence down here. All right. So are you long this? Pete, what are you doing with this one? Are you long? Are you thinking of going long? Or are you short? I think he's long along it. Let me just see, 2x long. So this is a 2xer. Okay, so basically, I would not be long yet, but I would, okay. So I would not be long. It's still technically, okay, bottoming here. Now, you could make out really well if you happen to pick the bottom out. Good, so if this is the bottom, you'll do great. But I would wait for this to turn green. You've got bullish divergence. I think you're close. This is still pretty deep. All right, so I would probably be looking, I'd probably put this on a watch list, but I don't think I would go long with it based on my indicators, because this indicator here, the histogram, measures momentum, and I don't like to go long unless that's bullish. And technically, I've got a short trade still active from this move down. So I need a couple things to happen. I need to get above the upper base leg of that triangle to kill that downtrend. And then I need this to go bullish to authenticate a bullish trade to the upside. So currently, you're going against the trend. Unless you've hit the bottom perfectly, then you'll be vindicated. Otherwise, you know, you have to realize that, okay? So, you know, it's up to you. I think we're close to a bottom, but, you know, it could go from $6 to $3 or $4, and that's a heck of a percent down, okay, on a small cap stock. So we'll see what happens. I'm hoping for you that that is a bottom end, and it will accelerate then to the upside. So let's take a look at this next week as well, okay? I'm going to put this on here, try to make it back next week, and let's see how this is going. We'll have a few more price bars to see if that helps. But for right now, all right, things are turning around in the 60, but not quite strong enough yet on the daily. Okay, so that's kind of where I'm at on that. All right, so anything else? I know it's the holidays, so we may be short here today. So let me just see. I think I pretty much covered all the ETFs I think I wanted to cover. I wanted to cover gold. I wanted to take a look at the cryptos. I wanted to take a look at oil and silver. So those are some of the major ones. So I'm kind of liking that. Anything else? Let me see if I have a couple more here. I don't see any more coming in. Let's take a look at ones we looked at, I think last week. We had a couple last week that we had positions. Okay, so here is one that we actually liked for last week, and now it went back into the target zone. So for right now, you got to wait on this. Okay, if you're in it, you got to keep that stop at the very bottom. Otherwise, do not go in it this week. XNET is the next one I wanted to take a look at from last week. And let that load. So this one is good. This one did go up quite a bit. Again, this is more of a long-term trade than a short-term trade. And it is due for a pullback, but I do think it's a cheap stock. But I do think after the pullback, it will go higher. So I'm thinking that this is possibly a bottom here, but you can now get a pullback. So you got to be a little careful. And you got red over here. I think we're due for a pullback. I wouldn't be surprised if we get down to about 150 on this, possible, or even further until it rebounds. So that's quite a lot on such a cheap stock. All right, let's take a look at AMP. AMP. That was one we wanted to put on a watch list and watch, and that's still no go. All right, so yeah, we can't do anything with that. Still no go. STNE was another one. Let's see how that one's looking today. All right, this is one we're kind of thinking it's bottoming, but again, it's not quite broken out of the bottom. So, you know, you don't want to put your money into something that's not going to move. Okay, otherwise it just sits there going sideways, and sometimes it goes sideways for months. So you kind of got to be a little careful with that. Let's take a look at SAVA. All right, so this was one again. This would be more of a long-term trade than anything else. And we're kind of liking this, but not yet, because the 60-minute chart says the pullback that we're in here is not done yet. So no go on that. And let me see, I think what I want to do here is just let's go back and take a look at that MES for a minute. That's pretty range bound. That's pretty range bound. So this is the micro E-mini on a day trading time frame that we use. On the 15th, we have a chart on the left, the 15-second chart. We got a chart in the middle, a 1-minute chart, and a chart on the right, the 5-minute chart. So very, very short time frames. And right now, we're kind of consolidated. So I don't think I would take a trade yet on this. You know, in this short a time frame, it can change in, 10 minutes or so. But that's kind of what I'm thinking there. I imagine, let's take a look at the M&Q and see what that looks like. That'll probably kind of be, range is a little bigger here, okay? We're kind of moving up on a little bit on this. But again, not very clear, is it? Just a mess even on this time frame. So I stand back. You know, go get a cup of coffee, come back, and in 15 minutes, things could be different. All right, this is better. All right, this is the micro gold. All right, so this is moving up. So this would have been a good trade earlier when this owl went green, but it looks like more highs are coming. But again, right now, you know, you'd be chasing this trend up. You've already had 1, 2, 3, 4 pyramids in a row and a possible another couple forming. I would say if I was trading this, I'd probably wait for the next pullback and see if we still have PTFs that are green down here, and then go with that. Go with another long trade. I don't think I would chase it now, though. And then crude oil, let's just quickly take a look at that. That's a little bit on the messy side after a fairly large run up. Look at the 5-minute time frame. So we had a run up there. All right, but again, not very conclusive. So the intraday markets short term are pretty messy today. All right, and sometimes when that happens, no trade is your best trade. All right, so I kind of would hang tight on that for sure. All right, let's see here. We got, oh, Al, CHD. Al, how's that Ninja Trader working for you now, okay? Those changes we make help you? They did. All right, CHD, let's see. All right, Al, not bad, not bad. Okay, so let's see what we got here. All right, so the only thing with this one, Al, is I think we did not hit the target range that we had hoped on this pullback. So that is a little bit of a problem, and we have red over here. So this is basically saying from a longer term aspect, because this is the weekly chart over here, that even though we may be moving up off a bottom here, that bottom is not the end of the correction, that we should slide back in. Now, it looks like we're going to have more highs because the lower time frames are indicating that with the green PTF. But again, what I'm afraid of is this is not the beginning of a new major trend. This is just a correction in a pullback that's not done yet. So that's my problem with that, okay? All right, so Jerry, how are you, Jerry? Okay, hi, Gene and Bennett. Just thought I'd pop in and wish you all at traderscoach.com a very Merry Christmas and see what Bennett is looking at. All right, well, Jerry, thank you for being here, and Merry Christmas to you as well. And great to have you on board here. And basically, we're just kind of taking a look at various stocks that people have and some of the major ones at this point. All right. Let's see how we got going on here. Jerry's over in the UK today. All right. ES, I'm not sure what you want to look at on that. That was the E-mini I was looking at before, maybe. Is that what you want? All right. And Jerry's all the way in London. And he's saying it's cold and wet. All right. Well, they're getting a lot of cold weather here in our country, too. San Diego, we happen to have a really nice day coming up and a nice weekend. I think it's supposed to be in the 70s on Christmas. So that always is kind of a little bit interesting to have Christmas that warm. You know, I'm from back east, so northeast, so it was always cold in Christmas. So it's a little bit of an adjustment here, but after being here over 20 years, I'm pretty used to it. All right, so, okay, I lost sound. So sound is not there anymore. All right, let's take a look at MCD. See what we got there. Let me know if sound is okay. Okay, so Gene says sound is okay, so I think we're good. Probably something on your end, Al. Check that out. All right, so Frank wants to take a look at McDonald's here, MCD. All right, let's see what we got. He's got, let's see what your stop is at 269. So are you short or long McDonald's right now? All right, if you're long, you're out. Okay, so definitely check it for sure. All right, now I can tell you one thing, that even though this is saying short, it looks like we're going to go up one more time before we fall. Okay, so I think you got to be careful with the short position here. This is now changes everything. So now your high is here, which really is kind of an all-time high. So I'd probably exit this if you're short. Yeah, I'd exit. I'd get out. I don't think you're going to have a bearish move like you're hoping until after we get a little higher on this. So you can play that as you want, but that's kind of the way it's looking. You could also exit a short position if this goes green, okay? You could do that. We also have bullish divergence here. So I think this pullback is almost done. I think it's going to make another surge to the upside. All right, but I don't think you're talking about, all right, in terms of when this tops, then you want to go short. As long as this remains red, you'll get a nice correction out of that. So definitely exit short positions now. This was one we recommended, I think, a while back, and I think it's we got out a long time ago. Okay, so definitely take care of that. All right. Anybody else? Short one today. Short one. All right. Let's see what else we got. Glad the sound is okay. All right. Well, why don't we call it a day? All right. We'll call it a pre-holiday shorty today. Now, the intraday markets were a mess, so why don't we just call it a day? I don't think there's anything worth looking over there at this point. We're gonna have to wait probably a little bit more during the day before that's any good. So okay. CHD. Did I look at? I looked at CHD. Was your sound was off then, right? Okay. So CHD. Gene, why don't you type in for Al, CHD short time going up, long term not so good. All right, because the weekly chart is bearish, okay? So you probably got another high coming. So I think this bullish move is not over yet, but I don't think it's the beginning of a new trend because this is red. So I think you're only got a little bit of a correction here to go. I mean, you could get up into the upper 80s easily on this before it tumbles back down. And I only say that because if you drew a fib retracement in on this move here, I think you'd probably be right around that ballpark number. Yeah, upper 80s to low 90s, see? And then the idea here is here and then down. Now, if it keeps going here, that's great. But as long as this remains red, that means eventually it should tumble unless that indicator changes. And that indicator is right 75% of the time. So, with that kind of probability, I always go with it until it changes. Frank, Merry Christmas to you too, as well. All right. All right. Well, why don't we call it a day here? All right. And again, Merry Christmas, Happy Holidays to everybody out there. Now, we're going to be back next Friday, which is, again, the day before the New Year's holiday, the last time the markets open before the next year. So we'll be back next Friday, and the markets are closed Monday, so don't forget that. And have a great and safe holiday, okay? Oh, Al's got one more. PSX. PSX. Let's see what we got cooking here. All right, so this is one we looked at, and it corrected back down to here at some point and then took off. So let me remove these older lines here. All right, notice back here we had a green PTF. All right, so that was kind of good. Now it's yellow, and now this is red, so now it's coming down some more. All right, so let's see what we got cooking here. Yeah, here's the area here that we were looking at. So what happened is it came down to the target and then bounced off it. And this was a PTF trade because we were expecting that to get higher here, and it did, but now it's yellow. So you don't want to be long now, okay? The signals are indifferent except for the 60-minute is saying it's still going down. So at this point, you can remove all this stuff. Let's just go ahead and remove all those. And basically, the long trade was profitable, but when it turned yellow, that's when you get out, okay? And if you didn't and got out here, you got out in the pyramid here. So you should not be long this right now. Okay. Oh, Terry's got one. SUN. I don't think I would. I mean, the only short you could take on this, Al, is the PTF. I would make this a short trade based on the 60-minute. All right. But the problem with this is you got to put your stop. This could still be in retracement mode. So, you know, you could get up to 107 before it comes back down. So you got to put your stop pretty high, and that kind of hurts the risk to reward, right? So I'm not so sure on that one. I do think a short trade at this point is better than a long trade. I will say that. All right, Terry, let's take a look at SUN. Sun. All right, so Sun is looking good on the weekly chart, good on the daily chart, messy on the 60-minute chart. All right, so let's dissect this. So on the weekly chart, it's looking like we should get above the high of this price bar here, okay? So right about in here, and that's based off this. This is kind of indicating the same type of thing here, all right, at 45. So that's looking at this high here. We got red here, we got red here, so kind of got to wait a little bit on that. The other issue, too, you got to be careful about here is that we've had a big run up on this, and now we're kind of getting this oscillation. So got to be a little bit careful. So if this thing goes up one more high and turns this yellow, all right, this could be 3, 4, I'm sorry, 3, this could be a 4, this could be a 5, we make one more high there, or a possible could be 3, A, B, C, all right, and then 4 completes after that. So I don't think a long position's bad here. I wouldn't initiate it here because the owls are red, but you know, it's not that great, okay? I'll say that. All right, so MTF, ROL, okay, ROL, right, the MTF, that's the multiple time frame scanner, right now, and you're saying that ROL came up as a short. All right, let's take a look at that. All right, so here's where you got to kind of think about this. Now, if you had come up, notice that this is this and this, and I know what you're looking at, so that's what created the short, right? You've got bearish, 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 bearish. The problem is that at this particular point, this just turned bearish. So this was kind of one that was green and then turned bearish. So this happens 25% of the time. So the PTF was wrong here, okay? And so then it abruptly changed red to correct itself, which was good. But the problem is, by the time it did that on this particular one, the move is already significantly down, all right? So if this had been red before, you would have caught it up here, okay? So it's a little bit, it's still going down, all right? But it's a little bit late to get in on that. I'd wait for some type of rebound and see if those PTFs remain red. And you'll get a rebound. The weekly chart's messy, all right? That's a pretty messy chart over here. So I'm not that excited about it, all right? So do you understand that? Do you understand how different circumstances can create different signals in terms of scanning? Then you have to look at the chart and see what the reality is going on. Are you getting in early? You're getting in late? Was there an extenuated circumstance? And in this case, it was the owl turning from, the PTF turning from green to red, and that's a late entry, okay? So, you know, that type of thing. So you always have to look at the charts, even though you get a signal possibility on the scanners. Cool. All right, Faye, how are you doing? Great. All right, cool. All right, let me just, I don't want to get off too quickly in case somebody else has got something else, but we'll see if there's anything else coming in here. I think we kind of covered everything. All right, I guess I'm not seeing anything more coming in, so I think we're good. Let's take one quick look and take a look at the markets here on an intraday time frame and see if they've changed at all. All right, so all right, the M2K is definitely moving up. That's a good sign. This is saying here on the 60-minute we got a high possible above 72.73. All right, we're at 1766, so a little bit more room to the upside there. That PTF has been green since 7:40 this morning, so you certainly could have gone in as soon as this owl turned green on that pyramid. So you could have been long here. Nice entry at the bottom on that one. So that's how quickly things can change on these intraday timeframes. Let's take a look. What's the market up about 81 points? So it is moving back to the upside. All right, so we had a move down here, volatility. Notice this was red, and then we had the move down. So it did what it was supposed to do, and now it's yellow and back on the way to the upside. All right, so that's bullish. So the markets have turned bullish, okay, since we've been talking. And that's how fast it can happen on the intraday timeframes. So even though you don't have a setup at this moment, all you have to do is wait a little bit of time when you're looking at short time frames for that setup to be. Day trading's fun. It's a lot of blast, okay? Just always use risk control with it. All right, well, I'll go ahead and end here. I don't see anything else coming in. You guys have a great holiday and a safe one, and we'll see you back here next Friday.